Welcome to Trading Lounge and the Bitcoin report for the 21st of May. And our original count is this here with an A wave, a B wave and a C wave. It's okay, but the C wave here is rather sharp compared to this move here. So one would think that this would be a third wave coming into play here for this. So that can look a bit like this here, I think. So wave 1, wave 2, wave 3, wave 4 here, and that wave 4 would basically retrace back up 38.2% where it is at the moment. So that's possible at that point, and then that would leave this for another move down here for wave 5. And if that's the case, then there would be an A and a B and a C wave over here, and then another 5 waves down at that point, which would take us down much lower at that point. So this is one thing that we need to be mindful of and we need to work through. So just to keep, we'll be looking at different counts today. We'll be looking at bullish and bearish counts. So we'll just need to work through them. But I think it's good, you know, when things like this happen, we look at both sides of the markets and put all the counts on the table, and then we just eliminate them one by one as we gather some evidence and information as the market unfolds. The thing that I don't like about this trade here, this particular pattern here, is the size of wave 2 compared to wave 1. It's possible, but it's not normally we see such a large wave 2, which is actually it's more time than the first wave. It's normally much shorter, like to this point here and then dropping. So that's one thing that doesn't sit right with this particular count. But still, if we make a new low, then you'll know that we need to have an ABC correction and then another 5 waves down at that point. Is it possible that we just stay with our original count here as wave 4? Possibly, and we would need to revisit all of this over here, and one of the things that I would need to do would be to put this wave 4 over here for this and look at this here in a different way, which I can do. I can look at this as basically 1 and 2 here, and 3 and 4 and 5. I can do it like that as a 3-wave move and a 3-wave move and so on. There's different ways this can be counted, and you've probably seen a few around. Which one is correct will be is yet to be determined, but if that's the case, then this pulls back to this wave 4 here. But one of the things that I still don't like about this is just the you know, coming back. If I go back to just shooting the breeze here. So if we looked at these counts as 1 and 2 and 1 and 2 here, just pointing out that then we could be, I mean, because to me this looks like if the market doesn't go down any further, and that's debatable, we need to go back over that, and I want to relook at that again today. But if this was all just wave 1 up here, then it pulls back to the 61.8% mark at 30,000. So that would leave, you know, and if Bitcoin was going to go to 500,000 or whatever people say can go to, valued at and all the rest of it, well then this here is not so much out of the question really, is it? You know, and then that would just take us in a third wave straight up to this point. So we just need to be a little bit mindful of this as well. It's just an idea, and it's an idea that I kind of like, because it still gives me the B wave here to be a bit complex, and it also gives me the very sharp and swift move of a wave 2. That's the personality of a wave 2. So this is possible, but we just would need to gather evidence to see this move up. You know, there's other things that can occur as well in all of this. We can just have 3 waves down, and we can also have 3 waves back up, a larger 3 waves back up to, you know, the supply level over here, and then have another 5 waves down in this case. So there's a variety of things that can happen here. I think the answer really just lies in the details of what information we can gather day by day as it unfolds into in this space here. So yeah, I've just shown a bearish count, which was the wave 4 and the wave 5 coming down, so we need to be mindful of that. But we could also have this count coming into play as well here, and we could also have that as a wave 4. We could also have this as a more sideways movement across here. I don't think that's the case. All the corrections have been pretty sharp and simple along the way. Yeah, so let's just go back to the 1-day chart here for a moment, and we've been working with this, but as I mentioned yesterday, it didn't really display a nice impulse wave up there. Now I can get an impulse wave out of it, but it does break a rule with wave 3 being sort of shortest. So we'll go back in and have a look at all of this area. First of all, I'll just move in through my thing. So this is a 4-hour chart. We counted down here for that. That's all accounted for. All those waves 1, 2, 3, 4, 5 all accounted for. I've gone through those on all the tick charts, and coming down here for the last leg of 1 and 2 and 3 and 4 and 5. We've done all that over the last few days. So then I was looking for if we're looking for the downside here, then this over here would be wave 3 over here, and then this would be wave 4 here. And we've been talking about an A wave, a B wave, and a C wave to move up. So that can be in place, and that comes in just, if you can just see in past the A wave here, that's a 38.2% retracement level. This move down here appears to be bullish, a bullish corrective pattern, so we can move up higher here. I'm just pointing out that our first issue was that I could count 3 waves up here for the A wave, and then we look for the B wave to pull back. So that unfolded reasonably well into our 50-60% retracement level area, and then we're looking for another 5 up into the 38.2. So now that's there. That was one of the first things. So if that top gets taken out, well, then we could take away that 4th wave here. So let's just assume for a moment that that top's going to be taken out. Well, then we can get rid of wave 4 here in that case, and we would have to look either further up for wave B, or the other point that I mentioned down here was that we could look at all of this as wave 2 down here. So I think that it's good that we just work through all of these. At this stage, the market's not really leaving the 40,000, but we do have a classic trading levels pattern sitting on this level here. So let's just, well, we can do it from here really. So we've got the arrival, the reaction, the first high above the level, and then we'll look for the correction. So that first high above the level, that's where we would normally go long from on that. So this is the pattern that we would look for. The arrival, the reaction, the first high above the level, and then a correction, and then we look for support back on the level, and we can go long from that point and this point and that point. So let's just go in and have a closer look at that. So if we go to the tick chart, we're working on the 20 ticks. Yeah, let's have a look at that. Doesn't matter. We can come back and have a look at the other one too. Probably will, should do. Let's just go here. Yeah. Okay, so yeah, we were looking at this move up, and then we're looking for a move back, and then we're looking for a move up to there for that, and counting. I can count 5 waves in here. That's not a problem. This is in 3 waves here, so that's good. My problem was always in here, so let's just go back in and rehash this from yesterday as well. So if we're going to look at it in, I'll just cheer up a little bit and say that we could count this up as 5 waves. So we could count all this up here for wave 1 here, and then a nice ABC back for wave 2. Now it is possible to put wave 3 from this low here, because I've just been through this, all of 1 and 2 here, and 3 here, and 4 here, and 5 here. So it's possible to have this as the 3rd wave, this is the 4th wave. So I'll just play it out here on, I'll just count it for us. So and then up for wave 5. So it's possible to do that, right? But the reason I didn't do it and didn't talk about it yesterday is because when I take this to here for this is a little bit shorter than from wave 4 here to wave 5 here. That makes this wave 5 longer. So that means that it's leaving wave 3 as the shortest wave. Now that breaks an Elliott rule because wave 3 can't be the shortest. That's why I didn't label it 5 waves. But I'm philosophical, I'm open-minded, my mind's open. So it could be the case. We wouldn't want to sort of like just throw it in the bin and say, well, it's definitely not that, and we get fixed on marry one side, or I should say fixed on one side. So in terms of going long as a trade setup, if I take the analyst hat off and put the trader's hat on, then I would be looking to go long above that high there. That's what I would just naturally do. I would also bring, if you know me, I'd bring that down to that one there, and then I would also work this new one here. So then I would be looking at being long at that point there, which I did for 50k. So I don't know, as long as I don't know if that's going to hold up here. If this drops back down below the 40 area through here, then I'll take that off. But otherwise that's a trade setup as far as I can see. And let's just see how it plays out. And yes, it can fail. You can have your stop just under here, or better to sort of keep it at the 61.8% mark, just sort of understand where that is. That's right on that low there, so that's okay. Having it below the 39.5 would be fine. Don't put it on 500. Never put a stop on a full number ever. You'll only be attracting a loss at that point. So we've got good reason to be bearish at this point, because this counts better as 3 waves up, even though we can squeeze 5 waves out of it. It also counts currently bearish as we've got an ABC pattern here. We could count this up as wave 1 and 2. That's the other thing here. We could count that as 1 and 2 here. Probably have to take it up a degree of notch, but that's okay. So as it stands, it can be an ABC correction and can count 3 waves in here. So it can be viewed as corrective. But at the same time, putting the trader's hat on, I've got a classic trading levels pattern sitting here, and it's telling me to go long at that point. So you can do that. I've done that, but it just needs to manage our risk on that. That's all. Just as simple as that. So we need to be a bit cautious. But if you were building into this trade, building into this market rather, then this would be one of the places to do it. The other place to do it would be on top, where you can build it in on 1, 2 and 3 here. F number 3 here, the 43,000, which is actually the minor level above 40,000, medium level here, then 1, 2, 3, make up group 1. If we get a tested support on here, with a little classic trading levels pattern on here, the same sort of thing, but it's the little mini version. First high above the level is what you want. You can get the second if you can get it, but I'll just put it up there for the time being. Getting support there on 43, on the number 3, getting a tested support on that level, that will sever the market from being pulled back to this number here. And then straight away, folks will start looking at 45. The market will be pulled to 45 at that point. So that's going to take us higher at that point. And if we take this top out here, that means, well, we will have to look at this as wave 1 here and wave 2 here. So I'm just being open-minded and treating both sides of the market fairly, and putting my analyst hat on and my trader's hat on to work through this. So at this point, the 40,000 appears to be trying to gain support. It will be support if this is taken out. Then then the market's proved to you or us that the market is strong by taking out a new high, and yeah, making a bigger structure here. So the safe trade would be here for that, taking this top out, but you can always bring it down a little bit here, because normally when they touch there, and even if they do touch there and drop back, you have to remember that double tops are never the end of the trend. So it'll pull back and then push up again from that point. So yeah, look, it's all about this top here, I feel. Let's have a look at Ethereum. So ETH's the same really, but slightly different, because with Ethereum here, we have to remember that this correction started 1 month after Bitcoin, basically. Okay, and in this case, it does appear we've got wave 1 and 2 here, and 1, 2, 3, 4, 5 the third wave, fourth wave, and then 1, 2, 3, 4, 5 down here. So I can count 5 waves down here. And then we're looking for an A wave, a B wave, and a C wave, and then further downside here for this, pulling back to the 50-60%. It hasn't really pulled up to there. It's really hit that 3,000 and stopped at that point. So the question would be, you know, do we just move that across here, and do we put this wave C on here and this wave B here for this? This could also be counted a bit differently here. We've got it counted differently on our website, so you can have a look at that, which I think is a little bit, I just need to double check it, but where are we here for this? 4 hour, I think. Yeah, so I don't know if I showed this yesterday either, but this was another way to possibly count it out as well here for this. So looking at this as wave 4 at this point here. So you could say with this as well, the same situation, this market would have to get on top of 3,000 to be positive. If we go and look at it on the tick chart, so rightio. So in this instance here, it's a bit hard to get 5 waves out of this move up here, isn't it? Because, well, it is, because I've got this as the A wave here, the B wave here, then 1 and 2 here, and then going up for 3, 4, and 5. So to me, it's pretty clear it's an ABC pattern at this point. And then I was looking for the B wave to come back. I don't need that B wave, that's not there, delete that. It's a different degree of structure, so we don't need that. We can copy these. So it went a little bit bigger than I thought, but still it's all in this. Okay. But it's near enough, do you know what I mean? To that sort of 50-60% retracement level. That can be, don't worry about the A wave there, that can be, it could also be viewed like that. But the main point here, however we count it, you can see how wave A is really quite sharp, and then wave C is quite lazy. So that also sort of helps to tell what it is in this regard. If this low here gets breached, then you'll be on the bearish side. If we're looking for a bullish move here for this, and looking at this as some sort of wave 1 and 2 here, then the way to approach that, I would say, we really want to be above the level. So we're looking for the first high above the level, and then some type of correction here, and then we can move in over this side. So we want to see this market really take this top out in this case, because it's not sitting on you always gravitate over to the closest largest number, and 3,000, even though it's kind of in the middle between the two of them, the medium level and the 3,000, it's all really about the 3,000 being the resistance at this stage, as you can, it's pretty obvious. So yeah, the levels really put a line in the sand. So yeah, if you wanted to build in on the long side, well, if I was going to, I would want the closest largest number as the support. And we also really want to, we really want to move past this ABC pattern. If that's the case, we really need to take this high out here for that. But I struggle with, yeah, sure, the correction could get bigger, but as I mentioned right from the start, is that this move up here appears to be in 3 waves. So that's a bit of a problem. Can you squeeze 5 waves out of that? Maybe. You'd have to look at it like this. That would have to be the 3rd wave there, and the 4th and the 5th. So it needs to go. We need to go back over and do that. So if somebody wants to do that as an exercise, that would be great. I'll double check on that later as well. But in the meantime, yeah, I wouldn't be looking to go long unless we've got this above the level here. A firm thing past, just to because when you get into here and and you make it fit, it's still splitting hairs, and everything relies on that little bit of work in there. So because it's not obvious, then more caution is required, and that more caution would be looking at this number here, the closest largest number in this zone, to be the support. So let's just see if that occurs. Right. Just the other thing that I wanted to mention, it's probably not that important, but while this was all pushing up through here for this, right, then we saw gold moving down through all of this, and now we see gold pushing up from this point, and we're seeing Bitcoin being sold off quite sharply at this. They weren't exactly the same dates. It was somewhere around here, I think, that gold bottomed and started to push up, but it's okay to have a good few weeks of changeover as money sort of flows. So yeah, they've just been working in opposites to each other a little bit, and I'm thinking that maybe to understand this correction, if it's going to get larger from all of this and move down here or do something more bearishness and all the rest of it, it could go sideways first and down or whatever. But I'm thinking that when this bottom comes in for Bitcoin, and this is just a bit of a thought, is that when gold has its 5 waves up here, so I'm looking at this as the arrival, the reaction here, and then I'm looking for 5 waves up here. So these 5 waves up here will create the first high above the level. So the arrival, the reaction, the first high above the level. And normally I'd be looking within group 1, anywhere between 1, 2 and 3, realistically, in that space. And I'm thinking that when this starts to make new highs here, we're going to see the flow of money come back in to Bitcoin from that side of it. It's just a thought, and we'll keep an eye on it, because it will come in handy a little bit later on if that's going to be the case. Anyway, just shooting the breeze on that one. Just thought I'd share that. Alrighty, so I'll leave it at that. Thanks for tuning in. Cheers.